Hi, welcome back to our channel. Here at WIS, we talk about all things to do with money, mortgages, and positive money mindset. If that interests you, then hit the subscribe button and the thumbs up. It means you won't miss out on any of our videos. In today's video, we'll be discussing how to save tax by owning a buy-to-let property through an SPV or otherwise known as special purpose vehicle. We'll be covering everything from the pros and cons to how to set one up, and why it may be worth considering this option if you are going to buy a buy-to-let property. So let's get into it. SPV. There's two main ways to invest in buy-to-lets. One is purchasing one in your own name, and the second way is purchasing one through a limited company, SPV. When you purchase a property through an SPV, the company will own the property, and the mortgage will be in the name of the company. What are the benefits of purchasing a buy-to-let through an SPV? Before the 2020-21 tax year, landlords used to be able to deduct the mortgage interest under their individual tax computation, which was quite a big saving. However, that rule has since changed, which left landlords having high taxable profits if they held their buy-to-let properties in their own name. One way to avoid this would be to use a limited company, SPV, to purchase the property. It's also beneficial for landlords who own more than 4 properties who would otherwise be considered portfolio landlords, as this doesn't apply to the properties in an SPV. How does an SPV save you tax? Companies have a corporate tax rate of 19%, as opposed to an individual's rate of 20%, and then 40% if they fall in the higher rate band. Also, if you transfer monies from another company to the SPV company for the deposit of the property, you will also make some savings on dividend tax. You will also save money on stamp duty, because you will end up paying single property stamp duty for the purchase if the property is sold to the limited company and not to an individual, who is likely to already own their own private residence and therefore pay extra stamp duty on their second home purchase. Things to consider when setting up an SPV limited company. To set up an SPV, you will need to pay £12 to register company with Companies House. As this isn't a normal limited company and is being used for the purpose of purchasing a property, there are relevant SIC codes you would need to select when doing this. For this reason, we would suggest getting an accountant's advice to help with this part of the process, although it is possible to select and do yourself. As it's still a property purchase, you will need to have a solicitor. Since the company and applicant are two separate entities, it is mandatory to maintain a separate business account in the name of the company. All the relevant transactions related to the company, such as rental incomes, mortgage payments, property maintenance charge, etc., will have to be processed through the business account. For more information, it's worth contacting an accountant. If you don't have one, you can always contact us here at WIS. We have an accountancy arm and a mortgage arm of our business, so all the advice is in one place.